All right. Hey there. Thanks again for tuning into the Investment Property Geeks of Charlotte. I'm Chris.
And I'm Jesse.
And today we are talking about how to cover your assets.
CYA.
Risk mitigation and insurance. And we've got a really cool guest today that I'm super excited about. A friend of mine, Rob, is going to be on with us in just a little bit. And we're going to talk more in depth about insurance because I think we know enough to scratch the surface, but certainly Rob is the expert. He's been doing this a very, very long time and is way smarter than us. So, yep. Let's first talk, there are some things that you can do. Certainly insurance is very important, but hopefully, it's one of those things that you don't really want to touch unless you absolutely have to.
Right.
And there are certainly some things that you can do to hopefully lower the likelihood that you're going to have to file a claim on insurance. At some point, you own enough property long enough, it's going to happen. And you want to make sure you got someone like Rob on your side. But there are some things that you can do to help mitigate some of that risk.
Yeah, that's exactly right, Chris. And, we're going to talk about this in a later episode in some greater detail, but just some things is constant inspection, preventative maintenance, getting out to the property and actually knowing what's going on. And I say this all the time to any potential client I'm speaking with, handling an issue before it becomes an issue.
Yeah, exactly. And I guess before we get into that, we should ask people, we totally forgot to do this at the beginning, but
right.
Please do hit that subscribe button. That's going to help you listen to great future content, as well as help others find this podcast as well. So if you find it valuable, please do hit subscribe and please leave us a review. Let us know your thoughts. Also, a couple ways to get in touch with us. You can send a note to podcast@investmentpropertygeeks.com. Again, podcast@investmentpropertygeeks.com. Or you can go to investmentpropertygeeks.com, check out our show notes and other episodes, and check us out on Facebook. Just search for Investment Property Geeks.
Absolutely. Hopefully people are finding this valuable. And again, as Chris said, we definitely would value your feedback. So if you feel there's something that we've covered that was very beneficial, or if there's a topic you might want us to cover, we're always talking about.
Yeah, we love, we have a fun time thinking of folks to bring on, but certainly we'd love to hear from folks if there's something specific that you want to talk about too.
There might be something we're not even thinking of.
Yes, exactly. It could happen. All right. So let's go ahead and chat about some of these ways that you can mitigate risk. Jesse, you mentioned first screening tenants, I think was like one of the first things you talked about, right?
Yeah, exactly. So first and foremost, knowing who you're putting into your home. The best kind of background check is a thorough background check. And literally knowing as many details about a prospective tenant as possible before even letting them see a home. I think that's something that we've done very effectively, and it makes a difference.
It certainly does. A lot of the horror stories that I get back when someone says, hey, I think this tenant caused tens of thousands of dollars of damage to my property. I say, well, can you show me their application?
Right.
Can you tell me about the process you put them through to get them in the property? And usually there wasn't much of a background check that happened, or they forget to check some special things. And we're not going to get into the details of any of these things that you do to mitigate risk, because those are coming up on future episodes, background checks and how to do inspections at the property, screening tenants and that kind of thing. So, but yeah, that's super, super important. And you want to make sure it's easiest and cheapest to kind of find that out and filter them out ahead of time. And we talked about in one of the prior episodes about marketing for the masses and how many people you have to have. And that's part of that. Like part of what you're doing by filtering out and trying to get down to the best group of tenants is really you're trying to mitigate risk. It's possible that you could rent to someone at a higher price point, right, faster, but you have to think about that might come with a very huge price tag come move out.
Right.
So what we're trying to do is you want to try to avoid, hey, if I let someone in who's really highly qualified, it takes me an extra week to find them and I give them $25 less than I would have rented to this other person who's higher risk. Well, that other person that's higher risk, you might have got them in there a week earlier, got another $25 a month, but they might cost you easily $5-10 on move out.
Yeah, Chris, you said this before, and it really holds true. Begin with the end in mind. So plan ahead. That extra $25 per month, while it seems nice, it's going to pad your pocket. It might not be worth all the turmoil you're going to have with a bad tenant.
Yep, absolutely. Now let's assume that you've gone ahead and you've done your due diligence in screening your tenant, and I'll be honest with you too. This we're going through this right now. We have very good luck with the tenants we place. They typically take very good care of the home, but sometimes One gets through the cracks where you can only screen so far and you don't really know until you know someone. So the next piece would be
property inspections.
Yep. So yeah, make sure, again, we're not going to go into the details of this, but make sure you're looking at the property regularly. We'll talk about frequency and whatnot in a few episodes and some of the things to look out for there. But that is one of the areas, again, I go back to lazy landlord syndrome, and you talk about the mistakes that I made as an early investor. Man, it is tough when you've got a 9 to 5 or more like, a 60+ hour week job and you got kids and you're traveling. Like, the last thing you want to do is go out to your rental property and take a look at it and feel like you're a nuisance to the tenant. But it is really important.
It's the last thing you want to do, but it might be one of the most important things you can do.
Absolutely. And a lot of times too, you'll have, like, what we normally find is most of our tenants take really great care of the properties.
Right.
In fact, I tell owners probably 80% of the homes we walk into, I go, wow, you kept this nicer than the owner did. And that's true. But there are some things that you can look out for. Like, we'll talk about, hey, checking the plumbing and all the fixtures, looking for leaks, looking for spots on the roof, looking for signs of settling. Those are all things that if you can catch them earlier, they're going to save your bacon. A quick story I'll tell real quick, and I don't know if Rob told me the story or someone else, but someone was telling me that they had someone with a multifamily building, and they were doing, or the property management company was supposed to be doing, routine inspections, and there was a fire that happened, a pretty big fire at the building. And what they found was a bird had built a nest in one of the exterior lights of the building, and it was not caught in the routine inspection. They weren't doing a thorough enough job of catching that, and it got hot enough where it ignited. That stuff's like tinder.
Sure.
I think about what I use to start a fire when you're camping. Like, that's what you use. So it started a fire and spread from there and went crazy. So that's a really great example of, you're not just looking for tenants who are breaking the rules. You're actually looking for the homeowner type things to make sure you're protecting, covering your assets.
Yeah, there you go. And that's a great example, because again, that's not something you normally would look for, but yet look at the problem that arose from that.
Yeah. And I think the other thing too that we talk about with reducing risk or mitigating risk would be, in that regard, that kind of goes hand in hand with those inspections, is the preventative maintenance. So we'll talk about that in a later episode. We've got some tips and tricks for you of some actual real solid preventative maintenance things that you can do on a regular basis to help keep up with your property, make sure you're not, I don't know, again, you can't mitigate all risk, but this will help with some of that stuff. So
absolutely.
Make sure you're doing that preventative maintenance. It is important. What is it called? Don't be penny wise and pound foolish, that kind of thing.
That sounds right. I've never
heard that?
I've heard it. I can never quote that back to you. So that sounds right though.
Okay. Well, that's good. All right. Well, hey, let's go ahead and get Rob on. Jesse, can you please introduce Rob to us?
Absolutely. So our guest today is Rob Squidtriglia. I did say that right. He is the co-owner of Summit Insurance Group with his wife, Lisa. He grew up in upstate New York and Conway, South Carolina, and is a graduate of the University of South Carolina. Rob has been an insurance agent for over 30 years, and he and Lisa started Summit Insurance from scratch here in Huntersville, North Carolina. As an independent agency, Summit Insurance offers over 30 insurance carriers for commercial and personal lines insurance, and he has won numerous awards. The Business Journal rates Summit Insurance Group as one of the largest property and casualty insurance agency in the greater Charlotte market, and they continue to grow profitably each year. Rob focuses on commercial insurance and takes pride in operating an agency that is proactive for its clients instead of reactive. He writes coverage for buildings, contents, general liability, business autos, umbrellas, workers' comp, and bonding. Rob's been on the North Carolina Certified Insurance Counselor Advisory Board for the past 20 years, and his agency is active with various charities and nonprofits in the area. If you've not updated your commercial or personal lines insurance recently, be sure to give Summit Insurance Group a call or check out their website at www.summins.com. And at the end of this episode, we'll be sure to share all of Rob's contact information again.
Awesome. Well, that's a great intro. And I guess, Rob, we could have just summarized that by saying, you know what you're doing, you should call me.
Well, I've got to admit, I'm a one-trick pony. I've been doing this for over 30 years, and don't ask me to change a light bulb or do anything.
Hey, on more of a personal note too, just for some background, for some folks. So we asked Rob to be on because Rob and my relationship goes back to, I think he was one of the first folks I met, probably even before I came to Charlotte. We were starting our business and lives over here, and I had a heck of a time getting a hold of someone who would actually talk to me to help me with insurance. And Rob was the guy that like picked up the phone right away. Not only that, but several of the people that I had started to meet as I was asking them for referrals for insurance folks, they're like, have you talked to Rob yet? Anyway, Rob is also, they're more than just on this page. He's super well connected in the local business community here in the Charlotte area, as well as especially up by the lake where you guys are. But hey, Rob, too, tell us a little bit about some of the things you like to do for fun besides just business.
Not changing light bulbs.
I don't change light bulbs. I enjoy to play tennis. I play tennis twice, 3 times a week. When it's non-COVID, I like to go to the gym and work out. And right now, since I can't work out at the gym, I'm forcing myself to do P90X again. I took that off a mothball. A lot more painful than I remember. So I'm doing that.
Yeah.
Good for you, though.
Oh, yeah, that's tough. My wife tried to get me to do Insanity, and yeah, that didn't end well.
There's a reason they call it Insanity.
Awesome. Well, hey, so Rob, really, I think why this episode is exciting is that we get to give folks some real practical advice, and maybe for those people who are a little bit more embarrassed to talk about what they don't know about insurance, because quite frankly, I think a lot of people don't understand it. It's a kind of a cool opportunity to tell them what to expect and why they need it. So I guess one of the first questions we'll talk about is, hey, as a landlord, if I'm renting out my property, my homeowner's insurance policy that I have today is not going to be valid when I put a tenant in there, right?
That's right. You need to have a landlord policy when you're the landlord to cover your interest in that. And it's a different exposure all around. There's a lot more exposure when someone who doesn't own your house is in your house. It's kind of like when you go and you rent a car from Enterprise. You're probably not going to treat it with the tender, loving care that you do with your own vehicle. Same type of thing, only even worse. With the landlord policy, the landlord has to cover his interest, which is typically the structure, the house itself. If you're talking about a house, there may be an appurtenant structure like a detached garage that he has interest in as well. There's definitely going to be liability that he needs to provide just in case he's negligent for something. It may be, if it's a furnished building, maybe it has furniture in it and so on, that he does have to put some contents coverage in it too. And these policies can go from very, very basic to very, very broad, depending on how much the landlord wants to put into it. So a good agent is going to sit down and ask, hey, let's go through these questions, and the more information I gather, the better I'm going to be able to make your policy. And so with the landlord, that's really important. The other thing is that it's a separate entity typically. Chris, Chris Claflin is a different entity than Claflin Enterprises LLC. And so we have a separate policy on that. I'm a big advocate of umbrellas. I'd like to talk to everyone about that today before we leave. But it's a separate entity and it needs to be taken care of. With the tenant that's in there, the tenant has responsibility typically for his contents, which if you were to take the roof off of the building and dump it out, whatever comes out as contents, so that's going to be his clothing, his furniture, and so on. So that's the contents part, and then also the liability. So if they burn the home down, let's say they're cooking something and burn the home down, or someone leaves a cigar or a cigarette burning and it burns the place down, that's their liability. So they better have at least $300,000 worth of liability to make the landlord whole. Okay, so the landlord's policy covers the landlord for liability issues too. So let's say that there was a dead tree in the yard and he knew about it but just hasn't gotten around to it. Well, the next storm comes around and it blows that tree down and it damages the tenant's car, or it falls next door and it damages the neighbor's appurtenant structure or their home. So that's his liability too. So you've got to have both. You've got to have the property and the liability working in tandem.
Awesome. Appreciate that. And certainly there's going to be a lot of good stuff here to dive into. I want to rewind a little bit because I'm going to kind of go along the lines of what a lot of folks typically ask us. So, we talked about liability, we talked about contents, that kind of thing. So how much, I guess maybe you kind of already talked about this a little bit, Rob, but like, can you kind of highlight for folks or break it down simply, like what's the major difference between a regular homeowner's policy while I'm living in my own property as an owner occupant versus now I'm about to move out and now a tenant's going to be living in there? What's the major differences?
Yeah, so the homeowner's policy is one of the broadest policies you can purchase, period. Along with the personal automobile policy, they're very, very broad on purpose because people have dynamic lives. When you go over to a landlord policy, they don't want to make that policy as dynamic and is covering everything because there's a lot that can go wrong. So anytime that someone decides, hey, this secondary home that's in the mountains, we're not going to be using it much anymore. We do want to rent it out because we feel like we can get some good income from it. We change that into a landlord policy. And while it gives plenty of good liability coverages, it's not going to give us much on the property. There's always going to be stipulations on things. Dwelling policies is what they are. You can get anything from a DP1 to a DP3, with the DP3 being the most advantageous to have. But I always go back to making sure that you insure the structure to value, that you have enough contents coverage, and that the liability limits are enough. Liability limits not being enough is it's sacrilege because it's so inexpensive to get a good limit.
So what would you recommend if you're kind of coaching someone who's renting out their, let's call it a single family house? That's what we have a lot of here in Charlotte. So they got a single family home. Kind of what kind of liability might you recommend folks be thinking about?
So on the actual policy itself, the dwelling policy, you want it to have at least a $300,000 limit for liability. Then you need to have an umbrella sitting on top. I've got a $5 million umbrella personally on me and on my business. And the reason is that the more liability you have out there for an insurance carrier to pay, the more attention they're going to get when you turn in that claim. Let me tell you, there's a big difference between a $300,000 claim and a $5.3 million claim. And so when they see $5.3 million potentially on the line, they're going to get their best attorneys involved. They're going to try to clinch this thing immediately. You're going to get their complete attention. The good thing about it is that first $1 million of umbrella is always the most expensive. The second million isn't nearly as expensive. The third is probably going to be just a minimum premium, along with the fourth and the fifth million. So that $2 million umbrella is going to cost about what a $5 million umbrella is. And remember, we're talking about different entities. We're talking about typically an LLC that has interest in the landlord home versus the individual. And both of those are different entities, and both of them need to have umbrella coverages.
That's a good point. And most of our owners, surprisingly enough, I think a very minor number of our owners, or a small percentage, have some sort of third-party entity like an LLC that they're holding the property in. Most folks hold it in their name. Then I would say it's about 50-50 who hold it in some sort of revocable trust or some sort of trust, and then in an LLC. So minimum, you say $300,000 liability coverage. We tell folks, like, hey, contractually with us, you've got to have at least $500,000. But we strongly recommend you have at least $1 million. And if you're really smart, you go for an umbrella policy. That was advice, I think, too, you gave me a while back, Rob. And it's true, because it's like the cost difference is usually pretty negligible, right? To go from like $300,000 up to $1 million in liability. It sounds really like it might be expensive, but it's typically not.
It's really inexpensive. Normally, these policies come with a $300,000 limit. You can increase it to $1 million for probably another $25 a year.
Wow. Yeah, that's I call that like sleep easy money. Like, go to bed with a clear mind at night.
Yeah, for $25 more a year. My gosh.
Yeah.
No doubt.
Cool. So we kind of covered liability. So like you said, the more exposure you have, and we can talk a little bit more about umbrellas later. But what about like the dwelling coverage? Because too, sometimes folks confuse the liability and the dwelling coverage, and we have to back the train up and say, hey, whoa, you don't, if it's a $200,000 property, it's not like you need $1 million for the dwelling coverage. It's really your risks of being a landlord that we recommend you have $1 million for. you still need whatever dwelling coverage you need. Can you kind of talk to us about that and how you value that? And
Sure. So there's three different ways that we value things. Three different values that people are going to hear about with their home. The first is going to be the tax value. This is what the tax man says it's worth, right? And that might be $800,000 for this structure. The next is going to be the market value. This is what the real estate agent says that he can sell the home for. The third, and the one that we look at, is replacement cost, because the insurance carrier is going to say, how much is it going to cost for us to rebuild this house from the ground up if there's a complete loss? And so it's important that we take our clients through a cost estimator, that we find out all kinds of things. I brought one here. I don't know if you can actually see it, but
the folks watching the video can. But if you're driving and listening on your radio, probably not.
Don't do that. So it's nothing really. It's not super interesting, but it's very important that we complete this. And it asks things like the structure of the house, what's it made of, how many bay windows does it have, ask about heating and air conditioning, so on. And then what we do is we plug that information into this building value estimator, and it's about 7 pages long. And it goes through all kinds of things. I've highlighted some things here. Like the basement, the exterior features, the floors, what are they finished with, and that sort of thing. And we plug all that information in, and we get the value of the home, and that's very, very important. I can tell you where people get bit a lot of times is they feel, I bought this house, I got a really good deal on it. I don't want to insure it for any more than that. Well, there's something called co-insurance, and if you don't insure this home to value, you're going to find out at claim time that you should have insured it to value. And I've got a quick little schematic here. I'll show you. This is the formula that we use. Did over should times loss, and that equals the claim payment. What did you insure this for over what should you have insured it for, times the loss, and that equals the claim payment. So let's say that someone got a really good deal on a home and it was $200,000. But we do the cost estimator and it ends up being $400,000, right? And the person's like, you know what, I'm just going to take my chances. I don't think this thing is going to burn down anyway. I need to go to closing with at least $200,000 showing on this declaration page, and let's get on with life. Well, this is the reality of what happens. That person did insure the home for $200,000. They should have insured it for $400,000, so they only insured half. So a $150,000 claim pays them half of that, which is $75,000. Then they owe their deductible, and they're mad at the insurance agent, the insurance agency, the carrier, and it's all because they didn't insure that to value. So when we plug these numbers in, we come back and, hey, this is what it's going to be. Heed that. That's very important.
Yeah,
you got a great deal on a $200,000 home, but you're going to need to insure it to value.
Awesome. What about, I think what I found kind of interesting, Rob, is I've learned more and more about insurance is, and unfortunately, I think where folks get really surprised, and this goes back to why the very first thing that Jesse and I were talking about around risk mitigation is so important. Is insurance is definitely important and it's going to cover a lot of things, but there are some things that people would expect it to cover that it's not, right? Like I had a client one time that was not a mutual client of ours, so not affiliated with Rob, but we had an issue where we went out to do an inspection. Another management company. I think I've told this story on here before, so I apologize. I'll make it brief. But it was managed by another management company for multiple years. Owner transferred it over to us. We went there and we saw standing water in the shower in the back bathroom of the house. And we're like, hey, how long has that been a problem? He's like, I don't know. Previous management company never fixed anything, so I didn't say anything about it. And I'm like, well, this floor kind of bounces in the bathroom. And sure enough, there was enough that what had happened is there was a clog in the drain line, so the water was standing. Well, there was also a break in the seal in the shower pan around the drain line. So the water was coming down under the pan between like outside of the drain line and then rotted out the whole floor, the subfloor, and the joists underneath. And we had to have that bad boy mitigated, mold tested, tore the whole corner of the house apart, replaced the joists and everything. Guess what? Wasn't covered. Because
wear and tear.
No, yeah, right. Like it was. What's the phrase? Sudden and accidental. right?
Yeah, in order for a claim to be covered, it has to be sudden and accidental. So if it's 20 degrees outside here in another 3 months and pipe breaks, that's sudden and accidental. But if you've got, a shower enclosure that wasn't sealed properly, maybe it wasn't maintained properly, and there's a seal that's broken, and just over the course of months and months and months, there's an issue, there's no coverage for that. That's considered wear and tear. That's always an exclusion. Just like earthquake is always an exclusion. We had an earthquake here a couple of weeks ago. And by the way, if you have a pool, I suggest that you have earthquake coverage, because anyone with an in-ground pool could definitely have an earthquake issue. So earthquake is always excluded in these homeowners policies and landlord policies. Flood coverage is never included. You have to go through the National Flood Insurance Program, or we have write your own policy companies here in our agency. Wear and tear is not covered. War is not covered. There's going to be certain things that are not going to be covered regardless, because you can't cover everything and charge a reasonable premium on these policies.
Yep.
Things are going to have to be self-insured.
And so that, to me, that alone kind of highlights the need, for preventative maintenance and inspections, is because a lot of these landlords get themselves in trouble thinking, hey, if it gets real bad, I'll just file a claim. Well, you might not. You might not be able to. This was like a $10,000 repair that we had to do, and making that phone call to that owner and telling him that his policy wasn't going to cover it and there's no way he could have in North Carolina was not a fun phone call. It's like, I don't know. I'm just a messenger guy. I had nothing to do with writing the laws around insurance in North Carolina, but I got an earful. So please don't let that happen to you. Please make sure that if you're doing this on your own, you're taking a look regularly. There are a couple other things too, Rob, right? Unless you get special, I don't know what they're called, binders or coverages, for example, tree roots growing into sewer lines. Is that something that's automatically covered, or you got to get special coverage for that?
No, that's not. That's wear and tear as well. Those are certain things that an insurance carrier is going to have a real problem getting an actuarial amount to charge on that. So again, that's maintenance as well.
Mm-hmm. Now, are there coverages you can get for stuff like that, or special provisions? I've seen that in some cases where someone's told me, hey.
So here's the reality with insurance. If you're willing to pay for it, there's somebody probably out there that has a policy that we can go to. It may be a Lloyd's of London contract, a special excess of surplus lines carrier that we need to access, and we're happy to do it. So sure. if you feel like you've got the money to pay for that, there's probably someone out there that writes one, and we'd be happy to research it.
Yeah. And so that would go to hey, so if you're thinking about buying a house, or maybe you already own one, and there are a lot of these properties around Charlotte that have these larger, bigger trees, and it doesn't even have to be a larger or bigger tree. But if you've got trees where the canopy of the tree, where the branches extend, is anywhere near where that sewer line is going to be, sewers are without getting too grotesque here. Trees love nutrient-rich water. Which is exactly what's kind of sort of running through the sewer line. And, unfortunately, we've had owners that have a couple surprises of those too. And that's usually to dig up a sewer line and have it replaced in the front yard or something like that. We're talking easy $4,000. And it can go nothing but upward from there, depending on kind of what's going on, if you got to replace that whole thing. So, and those roots like to get in there and get into the cracks, and they have a really crazy way of finding those cracks and separating those pipes apart. And then you just end up with a cesspool and lots of issues down the road. So be on the lookout for that kind of thing. And if you think that might be a problem for your property, be thinking about whether or not, because you might not be able to mitigate that depending on the situation. You might need to insure against it.
Yeah, Chris, the point you're making here, really, to sum this up, is know your property.
Yeah.
And especially if you are going to be insuring, know what you're insuring. There might not be a policy out there for literally everything, but if your property kind of has those unique features, you want to be thinking about that in advance.
Yeah, exactly. Awesome. All right, enough talking about poop and trees. Let's see. So I think we kind of talked about, the whole homeowners versus landlord policy, Rob. So thanks for clearing that up. What about, this is something that folks run into a lot that we try to give guidance on, but one of the problems with that comes with pricing your property too high or not having it really look great to get it rented is it might sit on the market vacant for multiple days on end. Can you talk to us a little bit about like, is there any risk of coverage lapsing when a home sits vacant, and are there things to be thinking about that?
So that's a good question. So anytime a home sits vacant for 60 days or more, it automatically loses some coverage. Broken pipes coverage, riot and civil commotion. There's certain things that when a homeowner's not in there, he's not going to know that the pipe burst because he's not living there, right? It could be vandalism and things there. So what we do is when we know that, and by the way, keep in touch with your insurance agent. Let them know, hey, look, this thing has been sitting for a while. I've been trying to sell it. And then ask the insurance agent if there's anything he can do about that to make sure the coverage is put back on. There's something called a vacancy permit that allows you to put some of those coverages back on. We go back to the underwriter and we say, look, this is the situation. And they're not very expensive. They're not very expensive at all. And they can add some of those coverages back. So that's a must.
Yeah. Yeah, it's a good point, because that's where, I mean, like we said, you've got enough properties over enough time, stuff happens. Like that is the scariest thing is when we get that call, and someone's going through the house and like, hey, did you know there's water dripping from the can light in the ceiling? And you're like, I'm pretty sure that's not where water's supposed to come out. And so you run out there and you're like, oh gosh, how long has this been going on? Because it's been sitting vacant. So that's good. I appreciate that. And I didn't give you that question ahead of time. So way to hit that one.
You didn't. Let me add something else, because these forms do change. The way we used to get around that is we would say, look, it's not vacant if you keep some things stored in there. So instead of your storage facility, go ahead and put some boxes in there. Then it's quote unquote not vacant, but the insurance carriers have gotten smart to that. Now there's a certain percentage that has to be occupied. I think that percentage is like 35%. So if you're not occupying 35%, it's vacant. So they're onto it.
Wow. Yeah. Okay, cool. Now we talked about renters coverage. So you as a landlord should certainly have some coverage. Well, actually, before we go into renters coverage, let's keep talking about the landlord side. So you mentioned this whole umbrella policy coverage. What kind of things does that cover? Who should have it? How much does it cost ish? That kind of thing.
Okay. So an umbrella is going to sit under, like for yours, your personal one, Chris, for instance. Yeah. If you have an umbrella, it's going to sit on top of your home, on top of your homeowner's liability. It extends liability is what it does. So it extends your liability on your home from $300,000 up to say $1.3 million if you have a $1 million umbrella. If you have a $3 million umbrella, then it's $3.3 million, right? It sits on top of your automobile. So now instead of you having a $250,000 liability, you've got, if you got a $3 million umbrella, $3.25 million worth of coverage, right? So it extends what's underlying. If you have a boat, it sits on top of the boat. If you have an RV, it sits on top of the RV. If you have a motorcycle, right? So it extends liability on top of all of those. Now you need to make sure that the insurance agent has been notified and all of those sit underneath the umbrella, so the umbrella knows to extend over all of them. But that's what it covers. It's fantastic coverage to have. It's the most important. I would much rather have someone purchase an umbrella and forego having coverage on their comprehensive and collision on an older vehicle if they're looking for some money. You want something that's going to keep you from going into bankruptcy. And that's a great thing to have as an umbrella. Get as much as you possibly can. And the reason is because people ask me, well, gee, Rob, how much should I have? And my patented answer is, I don't know. That's up to a jury of your peers. They'll say whatever. It's up to the jury. So you might as well have more coverage, and it doesn't cost very much.
Yeah. So what are we talking? Like, I think a while back I purchased an umbrella, and I want to say is give or take 200, maybe 300 a year or something like that. Does that sound kind of about give or take right? Obviously everyone's situation is going to be a little different, but ballpark.
Yeah. They're typically $175 to $200 for the first $1 million. It's going to sit on top of those things I told you about. Now, if you've got a secondary home somewhere and a motorcycle, it's going to be a little bit more than that. But yeah, that's the most expensive part of the umbrella is that first $1 million. The second $1 million won't cost that. It might be $170 for the next one. The third $1 million might cost $100. and then the same for the fourth and the fifth if you want to go up that high. So it's very inexpensive to protect yourself.
Yeah. Okay, that's cool. Yeah, good to know. It also provides kind of some, I was interested to learn, like a lot of umbrellas, they kind of provide some interesting coverages of general liability that you really don't typically think about, like defamation and things like that too, right? Like if I go and say something really bad about Jesse and he sues me,
and he would.
Hopefully my umbrella, and he would. Hopefully my umbrella policy covers me for that.
So there's two types. So there's an excess liability policy that just extends coverage from what's underlying.
Okay, good.
And then there's a true umbrella, which are harder to come by these days. Okay. So what you have to do is make sure that your agent goes through the forms and endorsements page, and it says this is what's covered, and you have the verbiage, and it says this is who's insured, and this is who we cover, and this is how we cover. And then go to the forms and endorsements, because it's going to have exclusions for things like earthquake, total pollution exclusion for synthetic stucco, for asbestos, for all kinds of things there. And getting back to the landlord, you got a guy that's got an older home, may have some asbestos in it, may have some pipe issues. There's going to be an exclusion probably for fungi, mold. There's all kinds of exclusions. So read into that, have your agent read into it with you. And then if there's an exclusion there that really is a concern to you, ask if it can be bought back. Sometimes it can, sometimes it can't, but it's certainly worth doing that.
Okay, that's good to know. I didn't realize that. I thought it was kind of like non-negotiable. This is what you get, and you don't throw a fit. Yeah, that's cool.
No, sometimes it's not negotiable, but sometimes it is. Sometimes they can say, for a flat fee of $100, we can take this exclusion off. I can tell you on the commercial side, we're seeing a lot of exclusions for drone coverage. So a lot of my roofers, instead of getting up on a roof, they'll do a drone. Well, there's no coverage unless we add that back in. And we can do it on the general liability side and the umbrella side and provide physical damage coverage. So it's just going back to the underwriter, painting the picture for the underwriter.
Good to know. Good to know. Hey, can you give, I'm sure you have way more stories even than we do about some crazy insurance stories. And we'll get to tenant insurance here, renter's insurance in a little bit too. But from the landlord side, any good stories to kind of help drive some of these points home?
I printed off some umbrella scenarios here, which again, I'm a huge advocate of umbrellas, and this will kind of paint the picture for people who are landlords.
Now, we don't want to completely scare them away from renting, Rob. So,
no. But this will hopefully paint the picture here for you. So the insured's tenant claims that she became ill from carbon monoxide poisoning resulting from a faulty furnace. The tenant claimed that she has permanent brain damage now and demanded $750,000. Right?
Wow.
So that could happen, easily with even on houses that we live in. If someone has a pool, this is one to be concerned with.
Oh, yeah.
A 28-year-old engineer dove into a friend's above-ground swimming pool, struck his head on the bottom, and as a result became a quadriplegic. He sued both the homeowner and the pool manufacturer. The court found that the homeowner is 60% responsible and the pool manufacturer is 40% responsible, and awarded $10 million.
Wow.
Right? So, yep. This next one, a hillside on an insured's property was covered with concrete to prevent erosion. The concrete had been installed before the insured purchased the property. Approximately 5 feet of the concrete fell to the neighboring property, knocking the claimant's home from its foundation. The resulting claim was settled for $970,000. Right?
Wow.
So that's another one. And there's one more here too. It doesn't have to be right at your property, especially if you're a homeowner or such. So the insured hosted a beach party for their daughter. One of the attendees found what was believed to have been an empty and discarded propane tank. The tank was thrown into the beach bonfire and subsequently exploded, resulting in severe injuries to several guests. A $20 million claim was filed alleging that the insured failed to properly supervise the party.
What?
Yeah.
Man.
And we were trying not to scare people here.
Yeah, that last one sounded like a homeowner thing, not a tenant renter thing.
And most of these are going to be with automobile claims. So remember, this sits on top of the automobile. Your automobile is going to be that's your most exposure. If you're out on the interstate or somewhere, you rear end somebody, maybe you cause a 3-car, 5-car, 6-car pileup. Maybe if there's a death, if someone is maimed, which is even worse than death because it continues on and on. I mean, that's really where these things happen. Last year, we had a claim that happened in Arizona where it was, I think it's up to a $5 million claim now. One time he had a $9 million umbrella. He's like, I don't know why I need $9 million. Well, he's got a $5 million claim now. He's glad he had the umbrella.
Yeah, no kidding. Holy cow. And I mean, this is a hard part with insurance is like, you don't need it till you need it. Right. And, you know, knock on wood, we've been fortunate enough so far where we've definitely we've had owners have to tap into their insurance policies for things like pipes breaking, that kind of thing. But luckily we haven't had anyone have to go there from a liability perspective. I hope we never ever do. But I think Rob drives that point home where it's like, hey, we're not talking about, you know, $10,000, $20,000. Even that would be a big deal to some people. These things quickly go into multi-million, and where $5 million may not even be enough. I mean, that's crazy to me. Man.
Yeah, we can get up to 10 million pretty easily. After that, we'd have to get reinsurance or have to go to a specialty market for that. But anyone can get a $5 million umbrella just about calling their agent. And you know, you're never going to have someone that comes back and says, gosh, I sure am sorry that I had all this insurance coverage. You're just happy that the insurance carrier is standing beside you and taking care of that claim for you. I mean, it'll help you sleep at night for sure.
Yeah, absolutely. Okay. Hey, the other thing that we get asked a lot, Rob, is price difference between like, hey, my homeowner's policy now, and then switching that over to a landlord policy. Can you speak to that much at all, or?
Well, again, that's going to go back to there's more exposure whenever there's a tenant in it, because the tenant isn't going to take care of things as well. There's not going to quite be as much coverage, and the pricing is going to be a little bit more. And so it's just a factor of exposure. It's kind of similar to when you'll find this out sooner than later, Chris, is your kids will start driving. And for the first 3 years, you have shell shock with the price. And then after that, it starts going back down. It's just a factor of exposure, and that's really all it is. But it's not terribly much. What I would suggest is if someone's interested in renting out a secondary home that they have, maybe it's a beach home, maybe it's a mountain home, call your agent and say, hey, look, I'm thinking in the next month or two of getting a tenant in here. Can you run me a landlord quote? And by the way, I need to make sure I have at least 300,000. If you can bump that up to $1 million underlying for $25, do it. And let's see how much a $2 million, $3 million umbrella is. That way, it's a good pro forma for what they can expect.
Yeah.
They'll ask you questions. They'll pull the insurance score, and they'll do everything for that person. And that's a really good way to do it.
Awesome. That's great. Yeah. And the feedback that we've gotten from folks when they've kind of gone out and quotes is some go like, hey, it was, give or take 10% more than what I was paying before. And I've had other people who had like a lot of contents coverage in their house when they were the owner occupant, and they actually ended up paying less when they switched it over to a landlord policy. So I think it kind of really depends on your specific situation. But what we usually tell folks is like, yeah, it might be a little bit more. It might be a little bit less. It's going to be give or take pretty comparable probably to what you're paying now. Is that kind of a fair?
Yeah. I would just say call your insurance agent. Call the agent, because he's got all the information. The right. Current agent knows the exact home, knows where it's located. If he's had you insured for 5 years, he knows what losses you've had for the past 5 years or losses you haven't had, and can give you a really solid quote. In the next 3 or 4 months, if you're going to be doing that, then you can expect that to be really accurate.
Awesome. Can we talk to Rob about, so you mentioned contents coverage. So if I'm renting out my house, I empty it out. I'm not doing it furnished or anything like that. It's going to be a normal house. But I do have things like appliances still in there, like refrigerator, washer, dryer, that kind of thing. Are those contents or are those not contents?
So it goes back to the definition of what the building is and what the definition of contents is. And these are a little bit different across the board. They vary. So what you need to make sure of is that you go over your agent with that question saying, look, I've got these appliances, where are these covered? Sometimes they're on building, sometimes they're on contents. I've seen a lot of them on building. So you may not have to add any under content. A lot of times, though, there's some things that the landlord might leave in there. He might leave, a couple of couches, might leave maybe a couple of TVs, whatever. And in that case, it's good to keep a little bit of contents coverage on there just in case.
Sure. Okay, cool. Let's talk renters policies.
Yeah. Yeah, actually, Rob, that's the question I get asked more often than not. And we talked a little bit about this before in terms of, the owner's overall liability. But can you talk to us a little bit more about the renter's liability and the renter's coverage and what they should have? Because that ends up being a bit of a sticking point with some of the conversations I have.
Yeah. So here's how it works. So if you are renting out the home, and you tell the renter, look, per contract, I'm going to insure the structure, I'm going to insure my liability, but then you have to provide coverage for your contents, anything that you own that you're bringing into my house, into the structure, and you need to have liability coverage just in case you're negligent. So going back to maybe he has $60,000 worth of contents coverage, and there's a home fire, and the home is destroyed. Well, he's going to get coverage for up to the $60,000 for his contents minus his deductible, which is going to hopefully make him whole. And then he's going to have his liability coverage, which is there to make the landlord whole. So if he's got a $300,000 coverage, and let's say he's in a $200,000 home, then his insurance carrier is going to pay up to that amount, up to the $200,000 to make the landlord whole. Now, here's what happens in the absence of that. Let's say that the guy let the insurance lapse and the landlord was not on the tenant's policy as a certificate holder or as an additional interest and didn't know about it. The landlord's policy would pay for it, and then they would say, hey, tenant, you owe us this $200,000. We're subrogating against you. And so they can take him to court. They can garnish wages. They can do whatever they like, but it's hard to get blood out of a turnip.
Yep.
So you've got to make sure that these people, abide by their contract and that they understand that, look, it's not very expensive for an HO4 renter's insurance policy. I mean, that $60,000 of contents and a $300,000 liability, it might be $280 or $300 or whatever. It's not going to be very expensive, but that's the cost of getting in the landlord's building there. He's got to pay to play. Otherwise, don't let him in.
Yeah, that's absolutely crucial.
Yeah, and I think you brought up a really good point, Rob, which is I think it's pretty typical for most leases and most folks that are doing professional property management, at least, probably not so much if you're doing it yourself, although it should be common, is to require a renter's policy. But I've rarely seen a process where folks have a great process set up to where they physically are able to prove that the tenant has that policy. And what's more important is what keeps me from canceling it 30 days after I get the policy and you never finding out so I can stop. I have one less bill to pay. And that's a really good point. Is one of the things that we do is we say, hey, before you can get keys, Mrs. Tenant, to move into your new property, you've got to show us, you've either got to kind of work through our program to get signed up on insurance where we'll help you with that, or you've got to show us the letter that shows the liability coverage you have and that Sonnen is named additional interest or additional insured on there. And then we get those love letters in the mail when something goes wrong with their policy. And the first thing we do is send them a notice of lease violation. Hey, got a notice that your insurance is about to expire. This is what you need to do to correct it. You have X number of days. If you don't, you're in violation of your lease. Please give us a call back so we can help you out. And that's important because, like you said, Rob, like we've never had to use the liability portion of a tenant's policy. I hope we never do. But man, should one of those bad boys lapse and you got the propane bonfire situation, yowzas. The other thing too, I think that I'll bring up where we have seen the renter's insurance kick in, that I think is important to think about as a landlord, whether you're doing this on your own or not. We don't require folks to have the contents coverage. We strongly recommend it. But with the contents coverage, oftentimes will come the, what is it called? Loss of use, right? So can you tell us like a little bit about like how that works? Like, hey, if the pipe bursts and all of a sudden the whole house has to be gutted, I can't live there anymore. As a
right. So let's go back to the tenant who had the fire. He's got the $60,000 worth of contents.
Yeah.
Okay, that's going to be his Part C on his policy. Part D is the loss of income. So he's going to have a percentage of that. So maybe he has $30,000 worth of loss of income. And what that does is it allows him to get another place to rent for up to that $30,000 while your place is being repaired. And so he's not out in the cold. His policy should provide him that. Most of them do.
Okay. And is that the loss of use? And then there's like the loss of income on the landlord side, right? If you've got a landlord policy.
So the way that we do that with the landlord is we'll find out how much the rent is per month. Let's say the rent is $1,000 a month. Then what we'll do is for the 1 year, we'll include $12,000 worth of loss of rents. So if this building doesn't get built for another 12 months and he's losing $1,000 a month, then he's going to have that $12,000 built in. If it's built back in 5 months, then he's going to get up to that 5 times that 1,000 for 5,000.
Yeah. That's an important thing that we kind of forgot to talk about, and sometimes we don't maybe highlight enough. Is that loss of income on the landlord policy, because you certainly don't get that on your homeowners. Like you don't get an extra check when you get kicked out of what you could have rented it for. So that's kind of a nice thing with the landlord policy to help make you whole. Yeah, and we have seen on the renter side where folks they do have to move out if there is major damage to the house. We had that one time where the next unit over flooded. And completely destroyed the first floor of this one, and the guy had to go get a hotel for a couple of weeks while we're in there gutting the place and redoing it. And it's like at that point in time, it was a good thing to be able to say, hey, I'm really sorry. We can basically waive the rent for these months, but we can't pay for the hotel. That's what your renter's insurance is for. And if you don't have that, I'm really sorry. You should have listened.
And again, Chris, the important thing is that what triggers this is a covered loss. So it does have to be a windstorm, has to be a fire, it has to be something that's covered.
Sure.
Otherwise, it's not triggered.
Yeah. So it can't just be like, hey, I want to update my cabinets, so you're not going to be able to live there anymore.
Right. It's like, hey, I've got some wear and tear issues over here, got some mold that's been growing here for a year, and I got to get out. Sorry, there's not going to be coverage for that.
Right. Yeah. Yeah, exactly. Cool. Awesome. What else did we miss?
Let's see. I think we hit on just about everything.
Awesome.
One of the things, if a contractor ever does come to your house to do any type of work, make sure that he gets you a certificate of insurance and he names you as an additional insured. Okay. So let's say that you've got a roofer that's coming to your house and man, God forbid he falls off the roof and gets hurt. You got to make sure he has his own liability coverage, his own work comp coverage, and auto. The work comp, obviously, in that case is the one that you'd be concerned about. But in the absence of that, if you got a guy, maybe it's a guy and his son, and they work together and they don't have insurance, then don't let them on your property, because you're gonna be liable for a lot there. Just tell them you need to see a certificate of insurance and you need to be added as an additional insured. What happens when you're added as an additional insured is you take his limit and you have half of it. So for instance, if he's got $1 million general liability limit and he's got a $1 million umbrella, then what he's doing is he's giving you $1 million and he's keeping $1 million. So of that $2 million, you've got half of it. So that's really, really important.
Yeah, I think it's a good point. We tell folks all the time. I think, unfortunately, especially some of the DIY investors or first-time investors or folks who maybe don't understand the importance of really that yeah, cash flow is important, but the biggest value you get out of investing in real estate typically is on the value of the asset, the underlying asset itself. So it's so important to protect the value of that asset. And what we find a lot of times is to try to pinch a few pennies, folks will hire Joe in a truck, with a ladder. I've got one right across the street from me right now, piece of cardboard under the engine, dripping oil onto the driveway, like throwing garbage in the storm drain. Like, you get that guy who doesn't have adequate insurance and he sticks his finger in a light socket and you're toast. And so it is really important. And one of the benefits you get when working with a professional like Sun and Property Management is, or like Rob, and you get this great advice is, yeah, okay, so it might be more expensive than Joe in a truck, but not when someone, gets hurt or something goes wrong and now you're on the hook. So I'm glad you brought that up, Rob. Thank you.
Yeah, excellent point.
Yeah.
The only other thing, I just made a note here for when in doubt, ask your insurance agent to review this with you. Go over it. What we like to do is sit down with our clients and in review periodically and say, this is the coverage that you have. These are some coverages that you don't have. On my commercial clients, we're always talking about coverages that maybe they've heard about but aren't familiar with and want to know more about. Cyber liability is the big one. Employment practices liability is a big one. Hiring and firing practices. Talking about coverages that are out there that they may not even know about. So it's good if you haven't talked to your insurance agent in a while, reach out to them, say, hey, it's time for us to update. We like to proactively reach out. Some agencies aren't set up to do that, but you could certainly go to their office and sit down and talk with them.
Awesome. Speaking of which, if folks want to get in touch with you, Rob, what is the best way for them to do that?
Yeah, so our phone number is 704-659-2141. That's 704-659-2141. And our website is www.sumins.com. That's SUMINS.com. It's the first three letters of Summit and the first three letters of insurance.
Awesome. Great. And I know Rob and his team there, all very friendly and will be helpful to you. And they do have a whole host of options to choose from that will fit your specific needs. So, hey man, I appreciate having you on here. And again, if you liked this episode, please do leave us a quick review. Just tap that little star button on the app and hit subscribe. And again, shoot us an email at podcast@investmentpropertygeeks.com or check out investmentpropertygeeks.com or go to Facebook and check out Investment Property Geeks. And with that, this is Chris and Jesse wishing you a brighter life through real estate.